7.6% is a better inflation rate than the 13-year high rate of 7.8% recorded for the month of July, but it's still elevated. Lower fuel prices helped to temper the August number.
And here we saw fuel was actually decelerating on a month-on-month basis. We saw deflation of 3.8% compared to July. And this would be thankfully following the R1 per litre decline in petrol prices in the month of August.
Mano says all the signs are that South African motorists are set to get an even further reprieve at the fuel pump come October, following a R2 decline in petrol prices in September. Despite progress on the fuel price front, fuel inflation still sat above 40% in August on a year-on-year basis. But right now, the real cause for concern appears to be food inflation. Worryingly, that gauge jumped by 11.5% year-on-year, with the usual suspects of bread and cereals and oils and fats leading the inflationary charge in the category. A rise in food prices adversely impacts poorer households who use a greater proportion of their income to cover the basics. And while households generally struggle with the higher cost of living, there's an expectation that the Reserve Bank will hike rates further tomorrow in its bid to tame inflation.
The next meeting by the MPC, there is an expectation of interest rate hikes of 75 basis points from the 200 basis points that have already been hiked throughout the year, and potentially a couple more rate hikes from there. From a monetary policy perspective, we are certainly closer to the top of the rate hiking cycle than the bottom.
With the cost of living still rising for most South Africans and those carrying high debt levels set to service those at yet a higher cost, expect the financial road to remain bumpy, in the short term at least. Nompumelelo Siziba, SABC News, Johannesburg.